long-threatened tariffs from U.S. President Donald Trump have plunged the country into a trade war abroad. All while on again, off again, new levies continue to escalate uncertainty. Now, Ivan Bebek, executive chairman of Copernico Metals, has a strong track record in the resource sector. Ivan has played a key role in advancing mineral exploration projects worldwide. Copernico Metals is one of them, and is focused on unlocking high-potential copper and gold assets, particularly in regions critical to the future of electrification and industrial demand. So, Ivan, it is great to see you again, as always, and thank you for jumping on the show with me.
Oh, it's great to be here. Looking forward to talking about it and this exciting time with the tariffs and commodity prices.
Exciting? I don't know. Entertaining? Yes. So let's set a bit of a stage here. These trade tensions are shifting hourly at this point, actually, with tariffs being used brutally as a strategic tool in both economics and politics across the board. Now, we've already seen industries like tech, like agriculture, feel those effects, and now metals, especially copper, are coming into focus. So, since copper is crucial for electrification, for infrastructure, and even clean energy transitions, all of this is causing huge effects. You are there, you're on the ground. So, what kind of ripple effects are you seeing, and could we possibly see more?
Sure. I think it was expected that when Trump came in, we'd see a massive shift in a lot of policies, with monetary and fiscally with the U.S. and foreign policy. I didn't know, no one knew that the tariff war was coming, but it's definitely shaking things up. Good for gold. Gold's performing extremely well. Silver's starting to break out. Copper's done very well in the last few weeks. The commodities are actually finally responding as a speculator in the natural resource sector. We're finally starting to see that reaction. But the tariffs had a negative effect where they can kind of put a lot of capital on the sidelines. There's a lot of fear and concern, and no one really knows what the playbook's going to be. But there is some volatility here in the near term. What I see when I'm biased towards my industry as somebody that's been doing it for 25 years, I see a battle for commodities going on. A quiet economic world war over commodities. I see it in Ukraine. We used to see this with oil, in the Middle East. Now we're seeing it with Canada's rich natural resources. We're seeing with the US. We're exploring in South America. We're seeing the Chinese impact many commodity-rich countries. And now we're getting into trade wars, which will directly affect these commodities. So I think the importance of commodities is critical towards the growth of the planet and the modern electrification that we're seeing. And now we're starting to see it come to the mainstream media. Everyone's starting to realize that these commodities are quite serious. They're harder to find. And the quality of these commodities are a lot lower than they were previously.
Well, okay, so let's take a trip down memory lane then. Let's go way back to metalworks class in school, and we learned copper was, and of course is, a fundamental to electrical conductivity. It's indispensable in power generation, to transmission and distribution, and as well as renewable energy. I recently read a report saying that global demand for copper is projected to grow by 3.7% this year. However, the supply of copper is facing challenges. You know those projections and you know the challenges. So how do you see them affecting the industry's ability to support the growth of specifically electrification and renewable energy?
Sure. So the demand is very clear. Everyone's aware of that. And, as I said before, the quality of mines is declining. When I entered this business 25 years ago, we had closer to a 2% average copper grade that was being mined and of a ton of rock. Now it's about 0.5%. Now there's no shortage, in my view, of copper around the world, but very low quality copper, 0.2, 0.3 copper. There's an abundance of it. And what the real challenge is, I believe in this current cycle, is going to be that the time it takes to get that copper produced online. So we're dealing with a time issue versus a quantity issue, because the quality has fallen off. And then a lot of this abundance of copper that's sitting around in non-producing assets, big holes have to be dug. You have to impact socially, massive impact on communities in a lot of areas. There's environmental challenges that are going to really slow that down. So again, it's a time issue. The demand curve for supply is increasing. We are growing exponentially. The population has doubled on the planet since the 80s, or last 30 or 40 years. And so the curve is getting steeper and steeper on the demand side, but it's now harder to find these big quality mines. All the major miners are trying to secure whatever assets they can in terms of what they can acquire. Now we've seen some great transactions in the marketplace that indicate that, or they're making corporate investments into companies like ours that might potentially have a big rich copper find. So it's the pursuit of quality copper mines, quality discoveries are going to be what solve the problem quicker versus the lower grade abundance of copper that's going to be harder to bring online. And we're at the forefront of that. When you see this kind of environment as an explorer, if somebody wants to monetize a big copper discovery, you get excited. However, the caveat there, it's much harder to find these mines today than it was 20 years ago because all the ones that were sticking out of the ground are easier to find or very accessible. They're already big holes in the ground that are halfway down through their production. These are already producing. So we're in an environment where a big copper discovery is going to be worth dramatically more if it's of quality, and you're going to be able to monetize that in the sector. The tariffs and what we see going on, as we said before, I think this relates to a commodity battle that's starting to go on that used to be primarily with oil, but now it's going into the precious and base metal sector.
Okay, so let's expand on that a little bit. The infamous word heard round the globe nonstop right now, tariffs. And one of the latest ones being on copper imports, aside from the 200% tariff on French champagne that he just announced this morning. Let's unpack just the copper one. What impact could this have on global copper prices and also the competitive factor of industries that depend heavily on copper?
Well, they're now interfering with copper supply with tariffs, right? So it's going to make it more expensive. And you're starting to see that right away in the price. As soon as you add a tax to something and make something more expensive, the price goes up. So as we're seeing now, I think copper in the futures market is almost $5 a pound again. And so it's a double effect. Not only do you have supply and demand issues, now it's becoming more expensive with the tariffs. It's going to put some countries in a very precarious position, and it's just going to make the copper market much more difficult. So how this all ends up, how serious they are about these tariffs, how long they last or don't last is all to be determined. But right now it's having a very good upward price pressure on the metal price. And that's what I think you can expect more of as these tariffs continue to take effect.
Okay, so what steps is Copernico making to navigate through these muddy waters? Are you seeing, any long-term effects with this?
So that's a great question. And we're just finishing right now as we speak here, drilling our 20th hole in a first phase of exploring a project. And then we're going to put the drill away for a few months because the copper junior equity market is not doing well at all. Contrary to the price, to all this excitement in the copper market, the tariffs, as I said before, and the current climate, it reduces speculators. And the stuff that we're doing, the nano cap small companies, sub 100 million market cap, they're not as appealing. Second point is these things are very expensive to explore. They're very expensive to drill. And if you can't get paid for it in today's marketplace, you're better off preparing yourself to get more prepared for when the market really turns up, which is always a lagging effect and it always happens. We are actually looking at expanding our portfolio, adding more acquisitions into our portfolio to complement our current project, which is a major opportunity to find a major copper discovery in southern Peru. But we're very very capital minded in terms of being very disciplined with our treasury. I just came from PDAC, and I can't tell you how many companies were out of money with 2 or 3 million market cap scenarios with expensive copper projects, and some of them of really high quality. I think there's going to be a big consolidation. It's the point of this market, what happens next. If you look at the market as an investor and say, copper price is up, it's almost $5 a pound on the futures, gold prices near record highs. Why aren't my junior equities performing the way they should? Because there's always been a movement in the bigger companies first. Once the price movement hits a certain point, like Agnico Eagle's gone from $40 to $150 a share. I mean, can it triple again from here? Yeah, if gold keeps going to ridiculous numbers, it sure could. But once that profit margin starts to cap out and you don't have as much price appreciation, usually the money flows downstream to the mid-size, the mid-tiers, and then down to the juniors. If you can make a spectacular discovery in any market, you can get paid for it. We have a target on our property, which is already got 8 holes in it. The discovery's in place, and it looks like it goes considerably further and keeps going, but we don't have the permit to drill that yet. So we're not going to rush until we get that permit. We're going to be patient. We're going to grow our portfolio and make sure we're one of the best positioned copper explorers in the world as that final stage of when it trickles down to the juniors starts to take shape. And we think we'll be well suited by the second half of this year to kind of present that multi-asset company, some of the best copper exploration projects we can find, as well as the discovery we can expand in our existing project. And we're well funded well into next year. So we're in a really good financial position. to be patient. But again, the mistake I see being made is people spending a lot of money drilling, not seeing reaction from great results. And I think that's where you can really get into trouble. So being patient is key. Having the right asset is key. And if you have the right asset, capital, and you can be patient, you can situate your company yourself to perform at a much higher level than you would have if you drove ahead and took the maximum risk, hoping the equity market turned around. The tariffs are unsettling for many. I think gold equities are going to perform first. That's generally how our sector has worked. And then it will go gold, silver, and then copper equities they'll be the longest performing equities, I think, as the market starts. That's based on 25 years of following the sector. Gold has led. It's the most emotional metal. It's the longest history with money and currencies. And then it trickles through silver, which obviously trades at a ratio to gold. And it's also got a big industrial application in solar. And then it comes down to copper, which we all know is needed, but copper takes time. And that's something that we've all learned lately, because everyone's looking for these big copper finds that could solve the question of supply and demand. And it's not happening at a quick enough pace. So I think as we go 6 to 12 months out, you're going to see a lot more value for copper companies that could really drive a lot of equities to really good performing companies if good copper is being found.
Well, I think the lag in the quality copper that you're talking about, that's causing like physical copper traders to rush right now to ship supplies to the US ahead of potential tariffs. And that's going to, for sure, if not already, tighten availability in other regions. And it's driving London Metal Exchange warehouse stocks, up or down actually right now. So if these tariffs do in fact go through, let's talk about this. What could be the long-term effects and impacts on global copper mining industries? Do you think this will shift where mining investments and exploration actually happen?
Well, it's going to have impact for sure. We are looking for U.S. copper assets, as I stand with you today here on this interview, because I think that's going to be a great place to find a big copper discovery and to monetize it. I think the U.S. is really trying to corner their own commodities, and they're trying to protect their economy and be more self-sufficient. We've seen that in the first Trump. We're seeing it again here. I think as a running of a business, they're trying to really, I don't want to use the word be self-serving, but they're trying to look after their own and try to make it more self-sufficient would be the proper way to describe it. So I think it will impact some countries for sure. I think that countries that could find big copper mines like Peru, Chile, South America, Ecuador, I think these ones won't be as affected. I think it'd be more affecting China and different countries that might be currently in the mix with the US. I think this is for active trade agreements that have more issues. I think on the other side of it, your big consumer of copper, we all know it is China. So it comes down to how do they react? What's the counter reaction? This is too early to really predict the long-term effects, and we need to see how things fall into place. But it does not change the amount of copper that's not being found. It does not change the average grade of copper that's being found. And it does not change the electrification, which is going to continue. So however these tariffs play out, I think it's extremely bullish for copper. I think we're in a very good position as a copper explorer. I just think you have to be patient with the volatility in the current marketplace and align yourself with really good assets that could develop the solutions to some of these big copper the supply shortages we're looking at.
Well, do you expect copper prices to remain strong, or could you see a sharp correction then?
I think you could see some volatility, but the outlook for next year is a higher average copper price than this year. I believe it's $5 a pound or better. Seeing that by some of the major banks in the US, and also seeing it from BlackRock and some others on recent reports. So I think we have a permanent trajectory of copper performing. And I would say for the rest of our lifetimes, and hopefully we live long enough, but enjoy it all. But the copper market's not going to solve itself anytime quicker, not just because of the demand curve, not just because of the price of copper, but because of the time it's going to take and how hard it is to find quality copper mines around the world. You have two challenges. One is geological. The other challenge is geopolitical. And there's some countries around the world that have incredibly robust copper opportunities, but we won't go in those, and many major mining companies won't either, due to safety or stability of working in those environments. Maybe that changes at some point. Looking at a long-term view, I think copper is a perpetual performer. I don't think there's a quick solution. In the gold world, you can find a 100 million ounce gold mine, and that would supply a lot of gold to the world if something of that magnitude was found. And that can happen a lot quicker than finding a massive copper mine, which will take years to drill, years to permit, years to bring online. So It's a slow market. Slow makes it way harder to get and a much harder problem to solve.
Well, investors are very closely watching right now. The volatility is so heightened, especially when there is government intervention. Do you anticipate increased M&A activity in the mining sector as companies look to secure those supply chains and the resources?
Absolutely. I see two things happening. I see corporate investments. We've experienced one last year with tech buying 9.9% of our company, but I'm seeing it across other juniors. I'm seeing it in gold, copper, and silver, which is also a very difficult asset to find in quality. But I think the next phase of this market, you're seeing two things. You're going to see increased M&A, and then you're going to see consolidation of some of these smaller companies. When we get windows of a spike in copper like we did last year, a big long-term outlook, we're all forward thinkers, visionaries. A lot of companies will be created. A lot of projects will come online or exploration projects to go find. And with those windows, what happens is the market goes away and then everybody runs out of money. And I think we're at the stage right now where there's too many junior companies looking that don't have enough money. So either we need more investment from the bigger companies down, that would be corporate investments, or we need a consolidation and teams working together to try and drive some good assets forward. So our sector is going to go through a lot of M&A, I think, in the next 6 months. And you're going to see, and we're looking to buy things. So we're part of that equation. We're seeing things at a very, very good valuations. And this is where you consolidate and then you grow with the rising demand and the metal prices, as well as the actual supply and demand curve working in your favor.
Whew, I mean, we could go down a rabbit hole with all of this for days, I'm sure. Clearly, the landscape for copper and mining, whether it's pricing or supply or the broader implications of tariffs, it's a moving target. And with so much specifically hinging on a stable copper supply, the stakes couldn't be higher. Now, for investors, businesses, and even industry leaders alike, I have one more question for you, Ivan.
Sure.
Where does this all lead? As we navigate these challenges and opportunities, what's the one key takeaway you think everyone watching should keep in mind moving forward?
I think we're on the edge of a super cycle of a bull market in commodities. I think we are going to see a market that is we've never seen before in terms of it being very small, a very small market that's contracted a lot, not a lot of good quality opportunities to buy. And I think once the world recognizes there's a lot of big returns to be made in the junior equities and the mine side of things, as we're now promoting as a world, the commodity shortages, I think you're going to see a bull market like you've never seen before. I'm a visionary. I'm already in that market, so I'm in an incredibly positive mood, but I know it's going to be either months or maybe within 6 months to a year before we see it really take effect. But I think we're going to see one of the best bull markets in history. And for any investors watching, I'd be very specific. Watch the financings, what people have in their treasury or their ability to finance. Watch the quality of the projects that they have and watch the track record of what they've done previously before. The last 3 years have been the most difficult in the mining equity market in history, talking to people much older than I am in the sector. And that's usually the preamble before the opposite effect, the best performing equity market that you'll see in history. And so I think those returns that we've dreamed about as people that go look for mines and we try to get paid for and the speculation that can be worth a lot of money, that's coming. These tariffs have to work themselves out. The new playing field is going to be set. The demand curves are now starting to get out of control, and we're slowly seeing the generalist non-mining investor look towards mining. We're making it towards mainstream media. So I think a very, very exciting year in front of us. I don't know the perfect day that the light switch goes on and all sellers become buyers, but it does happen in a moment's notice. All I know is I become incredibly long copper, gold, and silver opportunities in anticipation of this, and ones that could make the world-class discovery that kind of dream return that you could go after. Now there's substantial risk behind what I go for, but the bigger the swing, the bigger potential reward and the bigger the risk. And I'm comfortable with that because of my track record in history. And I've been able to do it a couple times for shareholders in the past.
Evan, it's always a pleasure talking with you. Thank you for sharing your expertise today. We'll be watching closely as this situation continues to unfold.
Thank you for having me.
These conversations are packed full of useful knowledge for your portfolio decisions. And remember, these are the opinions of our own with vested interests in particular assets and companies. Always be sure you speak with your financial advisor and know your own risk tolerances. I'm Lindsay Melchick with Stockhouse Publishing. Join us next time.